Today, we are asking ourselves a question that you and I asked ourselves about 4 weeks ago.
Yes.
And then we designed a whole summit around it. We designed a whole keynote around it. And it's a simple question. Are rental properties riskier today than ever before? Or maybe not?
Maybe not.
Welcome everybody to your weekly edition of the Not Your Average Investor Show. I'm your host, Pablo Gonzalez. With me as always, a man that I affectionately like to call GC because he's got the genius concepts, knows how to generate cash flow, is a great co-host, and because his name is Gregg Cohen. Say hello, Gregg.
Hello, everybody. Fantastic to be with you today.
Fantastic to be here with you in the studio, GC.
We are here, baby.
Me and you, rapping, doing our thing. We got breaking news, GC. Save the date for the Q2 2026 Jacksonville Real Estate Market Outlook, March 24th, 12:30 p.m. What can you tell me about it, GC?
Already started putting the thoughts together, the slides together. As you all know, this is the quarterly presentation that we do that we spend the most time preparing for. I take in all the information that I'm finding in the real estate world. I'll sprinkle in information that's going on outside the real estate world, economics, world events, and we put it all together and really help you understand how you can make great decisions with your rental property portfolio. And we do this every quarter. So it's our most highly attended show. Wanted to put it on everybody's radar. It is March 24th. 12:30, same time as the show. For those who are already in the live studio audience, you are already registered. You just got to show up. So no change there. If you want to bring a friend, go ahead and tell them to go to nyais.com so they can get registered, and you guys will want to be there. It's going to be a great one.
And if you're listening on the podcast, Vlad, maybe you show up live and add to the conversation over here.
This would be a good one.
Gregg, are you telling me that you're going to make sense of this world right now?
Oh, you know what? That might be a little over-promising and under-delivering there. That's a bold task, but I will make sense of what you can do within your real estate portfolio, given the context of what is going on around.
Yeah, that is what you deliver on. And if you turn on the YouTube live, you see that Gregg actually said that he's already putting the slides together and he's doing it to make me proud.
That's what I do. Checkbox. He's probably proud.
No, it's March 24th. This man is already working on it. You can tell he puts a lot of love into it. It is non-obvious, helpful, practical insights into how to navigate the real estate market in the following quarter. That is why everybody shows up. That is why it's always our most highly attended, most highly downloaded show. And speaking of, I don't know how to transition from this, but we got another breaking news. I don't know if anybody here has been reading the Jacksonville Business Journal, but they published a story yesterday that was awesome. I'm going to share here in the chat for a bit.ly link to download. It's guarded, so we downloaded the PDF and we put it in this little site that we're sharing here in the chat for you to see. But GC, tell me about this article.
You know what? I just think it was such a well-done professional review, and it helps, I think, connect the dots on so many levels as far as why single-family rental properties specifically make so much sense as an investment, and how everyone can win when single-family rental property investing is done with an operator who is vertically integrated and with the type of scale that you have in one market. You know, for many, many years, decades, people have been asking, well, why single-family rentals, JWB? And why are you only focused in one market? And this reporter, I think, did a great job of connecting the dots on not only how investors win, but how the renters win and how the relationship between single-family rental properties and a growing and revitalized downtown work together. So I thought it was very, very well done, and something we're really excited about, especially because a lot of you were highlighted in the article. Our clients were actually highlighted in the article, and just a great celebration of your success.
You know, I remember meeting her at Summit. And I remember being like, oh, okay, cool. The Jacksonville Business Journal's here. Maybe they're gonna write a piece on it. And then after reading that piece, what came to my mind was, finally somebody got it.
Yeah.
Finally somebody got it, because it was a story. And it's what you said. It's a story. Yes, it's a story about JWB. Yes, it's a story about the wealth that JWB has built for investors.
Mhm.
Yes, it's a story about how downtown development and like JWB's efforts to be part of the pioneers that make downtown happen and make this city better. And it's also about how conscientious JWB has been about turning residents into homeowners, because plugging people into the economic flywheel is really, really important. So this doesn't become a city for people from not from here.
Exactly.
And the first thing that I thought to myself, GC, is you can only come up with these insights. You can only believe this about a developer by experiencing Summit, by experiencing our community. Like you, me, everybody in this building could have talked to that reporter, said the same lines over and over again. There's no way that they would have believed that this is really happening if it wasn't being told by our community that doesn't work for us, that has no vested interest
Right.
in it. And it just made it very, very true. I thought it was really cool, man.
You know what? There was magic in that weekend at Summit. It is a truly magical experience because of the group, the community.
Yeah.
And then it's sure the content is great, but it's not just Pablo and I speaking. It's then reinforced by the mayor of Jacksonville sharing her thoughts and communicating a similar message. And then a panel of truly movers and shakers who are moving billions of dollars in downtown. And then it's reinforced with clients who have been doing this model for over a decade and having this experience. And it's really magical. And so I think you're 100% right. I had no idea that the reporter was coming to Summit until a couple of days before. I had no idea that her intention was to write an article. But then when she asked for the interview, which I gave last Friday, and then seeing the article that was released this Monday, I think just a really great, I think, like you said, people just don't get it to the same degree unless they're in that room. And I think she gets it.
Yeah. It was really, really cool. I shared the original link to the article on top of the bit.ly because I just went to the bit.ly and it was kind of funky to get to it. So I know that Michael Santorios, who's here right now, he knows how to like jailbreak articles.
Oh, gotcha.
Because he's done it in the chat again. So Michael, do your magic with that article and give us the link to what to click on there. But highly, highly recommend reading that thing if you want to feel good about it.
Cool.
Who do they highlight? I know that they highlight the fairy godmother.
Jen Filson and Michelle John.
And Michelle John.
Yes, two of our just absolutely favorite clients there.
Yeah, really cool, really cool. That being said, speaking of the magic of Summit, speaking of all these different things, the idea for the show today is essentially is this topic, right? Like as Gregg and I were thinking about what's our keynote going to be about? What's Summit going to be about? Like how do we kind of like provide this experience that delivers non-obvious aha moments for people, that empowers them to like make great decisions for themselves, empowers them to like feel in control of their financial future. We were really just like thinking, we're really nostalgic about the whole thing, right? Because it was the 5th annual Summit, and we're just like, man, in 5 years, like what has changed? What can we say about the change that's happened in 5 years? That's the theme of like what we're going to talk about. But like, what was Summit like 5 years ago?
Yeah. Oh, Summit 5 years ago. Yeah. I was thinking about what the world was like over the last 5 years. Summit 5 years ago was special in a different way. It was a small group of early believers, I would say, that we had something special in our community. And so I remember, I think Jen gave you a call. Jen Filson gave you a call and was like, hey, we're coming to Jacksonville. We got to do a meetup, and we're getting together. So me and you, we got a reservation at Casa Marina down at the beach. We got a bar tab, and 6 or 8 of us just got around the table and had a great time, as you can tell here. That was the original Summit. So thinking about what that was, and then thinking about what we just experienced with, hundreds of folks who are linked together with this common bond. It started with a small but mighty crew.
Yeah. Pretty cool to go from. And if you were at Summit, this is essentially like a retelling of like kind of like how we opened up Summit. If you weren't at Summit, we want to share this message with you. All right. So we're kind of thinking about that. We had, we going from that picture that I just showed to JWB's corporate headquarters in a room overlooking downtown Jacksonville, windows all around us, 100+ people in there, very, very different feeling. And then we're just kind of like thinking about everything we had gone through, right? Like that first Summit was beginning of 2021. You could say that we were just getting on the other side of COVID, or you could say we were still in COVID times, depending on what state you live in.
Right.
Right. In Florida, we were able to gather at this time, right? And we were definitely able to gather outdoors. But COVID was a really weird time that it's really easy to forget about it, right? Like oil prices went negative for a minute there. And we didn't really know what to do. Luckily, we had the show. Luckily, we had this kind of like press conference every single week that I think brought a lot of people calm. But man, it's so interesting to think about like the feelings of what we were living in 5 years ago, going through COVID, and like
Yeah.
how normalized the world has become again. Like, you know.
Yeah. I mean, as people, there has just been such like a whipsaw effect.
Yeah.
And we feel it this week with the news that happened this week. But I think we have just constantly been pushed from one side to the other to, in all things investing and all things just being citizens. Like it has been a crazy 5 years. We had COVID, and there was extreme fear in real estate. And then, without too many months passing, it went from we were fearful of what home prices are going to do to all of a sudden real estate and single family rental properties became the darling of the marketplace because interest rates went the lowest that we will probably ever see in our lifetime. And there was this huge stimulus. So it's like you were thinking this, and now all of a sudden you're 180 degrees, on the other side. And then it just continued to go like back and forth, I think, for the last 5 years, and it continues today.
Yeah, yeah. There was that moment. I definitely felt like a really good marketer in that moment.
Yeah. Oh my gosh. Yeah.
I think all that stuff changed my career forever because I happened to be part of all of
Our
this.
show, that was the most highly attended showtime that we had back in the day. We were like 6 months into doing the show or a year into doing the show. We're like, oh my gosh, this is easy. We got a message that's going to connect. We're going to be in the millions by the time 5 years from now.
Yeah.
It didn't always work out that way.
But then a whole bunch of other stuff happened that's really easy to forget. Like, do you remember me being obsessed with the metaverse?
I do. Yeah. There's sometimes when you say things and I'm just watching. I'm patiently observing. That one didn't really work out so well for you.
The world was obsessed with it, man. The world was obsessed with the metaverse. Like all the like the real estate in the metaverse, all these different things. We brought on all these different experts to talk about like selling real estate on the blockchain and things like that. Seems like a distant future from that one.
Yeah, I never really understood it in the beginning.
Yeah.
I still don't really understand it.
Yeah.
But there was other crazy things. So we talked about Wall Street bets and the fact that like trading became this social experiment to stick it to the man. And people were, on sometimes putting their entire life savings based on what an internet chat room was telling them to do. And oh man, and that didn't work out so great for folks. There was Silicon Valley Bank and that bank run, and so it's just, you went from like gaming and gamifying, investing and doing it for this to try to stick it to the man to now all of a sudden people saying, is there going to be that was the fastest bank run that we've had. Is the cash that I have in an institution that I trust my money to be there tomorrow, is that even going to be there? And then, it's just been a lot, man.
Bunch of stuff I never thought I would see. And then the thing that really did stick around, right? And then this higher interest rates for higher than we anticipated, right? Like it's kind of like we went through all these different like haymakers, and this one really was the one that hurt.
Right.
And it felt like for the last year and a half or so, I can tell you, it's been hard to stay steady with the message of rental properties in this world. I'm sure it's been hard for your team to sell it all, sell it all, making them perform with tariffs and all these different things and like all these costs and everything that's happening. But it, like the message of Summit is that we made it through.
Yeah. Yeah. There's been a lot of noise in the system. There's been one of the most challenging times to do our jobs as those who want to build rental property portfolios and achieve financial outcomes for our clients. It's been one of the most challenging times, but we have survived. And then I started to think about, it's not really just a story of survival. Our JWB clients have thrived during that time. Mm-hmm. So then I flashed this number on the screen when we were at Summit, and I got a lot of oohs and ahs. Well, first of all, nobody knew what the number stood for, which I was kind of anticipating. $480,690,121. That's the amount of equity that our current clients own. That's the amount of equity that has been gained by following this plan, obviously having JWB support you, but buying and holding single family rental properties. And that number has continued to go up month after month, quarter after quarter. amidst all of this chaos. So I wanted everybody in the room to feel really good, right? It's not just about survival for us who invest in single family rental properties. It's about sticking to that plan and really, really thriving. And that's what we've done.
Half a B is pretty good. That makes clients feel great. I remember when we were first talking about this, I was like, dude, it's not just like clients feel great. I think you guys should feel really good, right? Like to me, this idea, when I think about 5 years back to now, I remember thinking, or even before we started the Not Your Average Vet show, like I remember 2019, I was like, I knew who JWB was, but there was a whole bunch of other, like outfits in town that seemed like they were, like a big deal and stuff like that. And suffice to say that real estate has gone through a lot of pain. Most of those companies are no longer around. And if they are, like a much smaller version of what they used to be. And then you guys are here. We started off, it was about like 40 people on the team when I came on, or like maybe 60 or something like that.
Yeah, I would have probably said we doubled in size since 2019 would have been a good guess.
Yeah, yes. Yeah, you guys had about 60. Now you got about 120
Yeah.
on the team, double the size, expanded into downtown development, done all these different things, and just like emerged as a battle hardened team that's been through like the last cycle, which I think is really interesting. So it feels like you have, like this being an inflection point, like us coming from like a hardship moment and coming out of it is something that as we were talking about it, you're like, I've been here before.
Yeah. I think that there are certain moments in our lives or in our career that are inflection points that set the stage for, the next decade or the next 2 decades of success. And you don't always know what those inflection points are when you're going through them, but through the benefit of hindsight, you look back and you're like, you know what? There was a lot of noise at that moment. I chose this path and it made all the difference. I don't know if you've ever heard that before.
The path of
Write that
less
down.
traveled or most traveled one? Yeah.
Well, there were a few less past that JWB traveled that were certainly less traveled. I think about 2010 as that type of an inflection point for us. Kind of set the stage in 2010, right? We were still in the thick of the Great Recession at that point. Values hadn't really recovered. Values were down. Real estate market values were down. Geez, probably about 30% in 2010. And there was a lot of noise. I remember people were shutting down shop in real estate. I remember when I would have conversations with people, outside of JWB and who didn't really understand the mission of what we were trying to accomplish. I remember people would take pity on me. Mm-hmm. Hey man, I'm really sorry that you're in real estate. You know what? Kind of like, can't you get a better job, man? There was a lot of that. And nobody really saw what we saw. But I remember business planning that year with my business partners, and we just started asking ourselves some simple questions. And we said, you know what? Do we believe in real estate? Do we believe that it's going to recover? Of course, the answer was yes. And then we asked ourselves, what do we think the special sauce is about what we hope to accomplish? And we realized that the team is the special sauce behind this investment. And then we said, you know what if we make some decisions and some bets, because we have a lot of faith that the market is going to recover. And we believe that investing in the team and the systems and what we're building as a culture, if we make some bets right now, and we're right, how much farther are we going to be ahead 5 years, 10 years, 15 years down the line? And so we did. So 2010 was the year that JWB started JWB Property Management. So we launched a new real estate business in 2010.
In the thick of it.
In the thick of it. In the thick of it.
Yeah.
And it's a business that doesn't necessarily pay off day one, right? Like the scale of properties that we were managing at that time did not justify the expense. That's what it feels like for a property management company. So a lot of risk. But you know what? That decision right there made all the difference. Yeah. And as we were sharing the story with everybody in Summit, I looked around the room and I was like, guys, none of you would be here today if we hadn't made that decision. Yeah. Because the property management is the greatest part of the vertical integration. It is what matters the most to this investment. And simply our model would never have survived or be as good as what it is today if we didn't make that decision. Yep. But it wasn't easy. There was a ton of noise, but we had a plan. Yep. And by following a plan, setting aside the noise, having the courage to make decisions like that at tough moments, then we were able to set ourselves up for what we see today.
Yeah. A plan in a time of chaos, setting yourself for success in the future. I remember we're on this run and we're having this conversation, like, are we at an inflection point? Is this it? How do we help people? Like, oh my God, this was Saran's show, right? Like
Saran with the plan.
Saran with the plan show, right? Like I remember it was a week before that we had the show with Saran. You weren't in town.
Right.
I was like, I know you listened to it, but I need you to listen to it with this lens right now because one of the things that we're all find very attractive is this idea of having property babies and being property pregnant, and that became a whole joke when like Leslie got up and announced, "I'm pregnant," in the middle of Summit. But we wanted to have a show about Saran having had property babies, and what it turned into was like, oh, Saran had property babies, and I'm trying to have a property baby, and I'm technically property pregnant. But the reason why Saran was able to move forward is because she had a plan. She had like a vision of exactly where she was with the plan, and she knew, like she knew where she was in that plan, and she had clarity of like what she was trying to accomplish. And that was like, that's the big idea. That's the big idea that we wanted to make the keynote about, the summit about, all that stuff. That's what we're talking about right now. Because if we are in a moment that, like maybe an inflection point, kind of like when you guys
I think
in 2020 started property management and set yourself up for 10 years, 15 years of like great prosperity and all of us as well, then how do we help people really re-understand this asset class, like anchor to like what this asset class, where it is right now, anchor to is the upside that's been promised in this asset class closer, more tangible? Is should we readjust what we think of the upside?
Yeah.
And then really like understand where we are on our journey, right? So like that's kind of like that's the agenda of the summit itself. It's the agenda of the conversation. It's what we're gonna kind of like talk about right now. But we were still, and this was 2 weeks ago.
Yeah.
We were still like, yeah, that's cool, but we're still in a world of chaos.
Right.
Which I don't know if you read the news this weekend. It doesn't seem any less chaotic, GC.
Goodness.
And that's when you're like, I'm built for this, man, because I'm boring.
That is right. Do you know how many people I've had since I talked about my love of being boring have come up to me since Summit and just talked about like how, number one, that they probably need a little bit more boring in their life. But they were just like, you know what, man, I've known you for 10 years.
Yeah.
I kind of agree. So I talked about how I feel like the world is meeting me where I am because I love boring. I really love boring. I think it's part of the reason that I love single family rental properties. And I know that boring kills chaos. And I know that there's a lot of chaos going on in the world right now. I was telling stories about how, like what I was known for in college. And you can ask any of my friends. We had a lot of my friends who knew me in college and a lot of family at Summit. I was telling them that I was known for how much I slept in college. Some people are known for certain things in college. I was known for how much I sleep. So I can personify boring. I really do. And then when I thought about what we really need more in this world, and boring came up, and then I thought about real estate, and I thought about single family rental properties and why I fell in love with this asset class. It makes sense from my lens, right?
Yeah.
Single family rental properties are boring. They just work though. Yeah. There's not like a shiny new object type of shine on them. We drive by hundreds of them every single day we go to work. Yeah. It's not like a flashy stock tip. People have been investing in them for decades. Yeah. Banks love single family rental properties and lending on them. So if a bank loves them, then they must be boring.
Yeah, nobody says single family rental to the moon.
Right, exactly. Yeah. It's just no. Yeah. And then I started to think about if you could design an asset class that would personify boring and have the most boring parts of it be visible and the best parts of it be hidden, you would build it like single family rental properties, right? Most people and most average investors think about rental properties and think about monthly cash flow, which we talk a lot on the show. It's important to have monthly positive cash flow, but it's not going to change your life anytime soon. It's a couple $100 a month, right? Yeah. If that's all you see, well, then you'd call this boring. Yeah. And now there are 4 other profit centers that are in the background of the exciting things, but they're not on the surface. So, this whole kind of like revelation that I had about me, the asset class, and what the world needs is kind of what I was sharing on stage. I think it connected.
I think it connected to some people. For me, I am a fan of the juice.
Yeah,
right? Like I like the excitement, right? So like the whole, the upside of it, the 1031 exchanges, the leverage, like all that stuff is what really, really connected with me. But when it comes to the boring piece, I thought that there was opportunity to talk about like the boring side of it. Over the last couple of years has taken a hit. and we are now in an era where boring is a little bit better.
Yeah, I think that's where we met, like the yin and the yang here kind of met, because it is impossible to say that the asset is not better today than it was a year ago. We talked about interest rates being about 1% lower today than they were a year ago. And I try to help everybody see just how impactful that is. It's not just that your monthly mortgage cost goes down and your cash flow goes up, but what also happens is when you have an interest rate drop of about 1%, that allows you to be able to get into the asset class, to be able to buy a property and put less down. Because now the decision you make today allows you to be cash flow positive, well, with only putting 20 or maybe 25% down versus 30 or 35%. And when you have less money that goes into something, but you generate similar cash flows, well, you make a better cash on cash return. And the biggest kicker is that your long-term growth, your home price appreciation kicks up. So the return on investment today is much higher. And that's not even talking about some of the incentives and the credits that are available. You know, you separate yourself from JWB, and builders just around the country are offering huge incentive packages to be able to help their clients get their interest rates low enough so that they can produce positive cash flow. JWB is offering cash flow credits, which do very similar. It's a very similar thing. You're able to basically buy an asset today and put somewhere around, you know, maybe $10,000 in your pocket within the first month, which is that's that cash flow jolt that we just never saw in investing in single family rental properties. True. Prior to the last year or so.
True. That does make boring better.
So boring got better. That's where we kind of met in the middle, and I'll give you that.
And you know, I agree. I think to me it has become very clear that this like combination of cash flow incentives plus the drop in interest rates plus the downtown thing, right? Like all the stuff makes like this like boring piece a lot better. My aha moment where I really got behind boring getting better was thinking about how this thing works, right? Like if we believe of like team first, then market, then property, the idea that we mentioned earlier, JWB has now officially been part of more than one market cycle. You guys are now rounding the bases for the second time. You know the path around the bases better than you ever have before, right? Like market cycle is 10 to 20 years. You've been in business 20 years. It's clear that we've gone through you started at the super low. You actually started at the peak high, went through the crash, went through the write up, went through again the other one, right? Like now we're pattern recognizing on the way up. And just as importantly, the idea that the team that you have on board right now has been through the down, for me, feels very, very real. Like when I'm in a room of like real estate investors, everyone's like, hey, everybody raise your hand if you're investing before the Great Recession. And the people that raise their hand, I'm like, oh, I wouldn't be that smart.
Like, they got massive street cred.
Yeah, now I feel like the JWB team and myself, we get to raise our hand. We're like, hey, raise your hand if you're around when interest rates were like choking everybody out.
Yeah.
So I think that that's really interesting. And even more, and when you combine those two things with my favorite topic of like your operational prowess, the flywheel, right? Like you have now been through the cycle multiple times. You've reached a certain scale where like your data points are like really, really fortified. The data flywheel is, more powerful than ever with insights, with buying power, and everything that comes with that. To me, that piece of boring makes, that operational side of boring to me is like something that really proves it being really, really better, right? And then that's how we get to this idea of the upside that I really like talking about. My other term apart from property
this was your time to
this
shine.
Is my baby. This is me, right? Like I named the Pac-Man principle, right? Like I don't think property babies is going to catch on as well as the Pac-Man principle. But like those are my two terms, right? So like this idea of knowing that we make our wealth from the home price appreciation, and that you look at my portfolio and I'm an outlier in all of this type of stuff, right? Like I'm at like 82% home price appreciation, seeing that come forward, and the idea that that you've uncovered this like monster insight, right? Like the flywheel is in full effect. Your capacity to like get insights your capacity to affect change, and then understanding that investing in real estate is investing in the path of progress is how you juice that upside, and that progression of going from like, hey, what's a great neighborhood that might have like a grocer coming into it to like, man, if we can make a downtown go, then like that is the ultimate path of progress. And then your dive into all of that to and like the journey through that to me was like an undeniable feeling of like not only is boring better, but the tangibleness of this upside that we've been seeing now that we're in this office overlooking downtown, seeing the building come up, seeing the density happen. That made the boring better and the upside way more tangible for me. So we went through kind of like a recap of like this like monster insight that this flywheel has produced.
Yeah, because what I'm trying to help people see is that what JWB believes, and many of our clients are subscribing to this theory, is that this is a once in a generation type opportunity to hitch your wagon to the greatest growth engine that you can have for investing in single family rental properties. And that's the next great American downtown. That's what we believe. And the studies show that when other investors who noticed that there was a downtown that was growing, and then they accumulated single family rental properties before it crossed that threshold of being the next great American downtown, they profited very, very well. And so the data supports it. Many of you who have been a fan of the show have seen this before, but it's really that powerful. Revitalized downtown cities over the last roughly 20 years have almost doubled the growth from home price appreciation compared to the average city in the United States. So there's something there. There's something there. Denver, Austin, Nashville, Tampa, and so on and so forth. So it's all about understanding that that is the greatest path of progress if you want to juice your returns. And then you might ask yourself, well, how do I understand what the next great American downtown? It's not rocket science, right? It's where do we see downtowns that are gaining in population at a rapid rate? 10,000 residents downtown is that threshold that other successful downtowns have crossed. And once they crossed that threshold, things really started to happen fast. And what we see in Jacksonville is that we are already almost at 9,000 people living downtown. Our growth has doubled almost in the last 10 years. And for the majority of those 10 years, it hasn't been nearly as fun to live downtown as it will be, as it is today, and as it will be over the next 5 years. So we expect hockey stick type of growth here for population. And that is leading to developers saying, you know what? Let me go and develop.
These are the receipts.
These are the receipts. Trying to help people see that what is going on in Jacksonville is truly historic in terms of the amount of development that's happening. We have $6.5 billion in downtown development happening right now. And specifically, there's about $3 billion that has either been completed or is under construction right now. I can't find any other downtown that post those types of numbers. And for fans of the show, you guys know I literally go and visit downtowns. I've been to Austin, I've been to Denver, been to Tampa, I've been to Nashville, been to Washington, D.C. I look and I can't find anything like what we have happening right here in Jacksonville.
And I thought to me, the two things that really made this summit very different than the last couple summits is one, being in the JWB office downtown, overlooking it all, and then walking downtown, and it was no longer, our last 3 years, it's been like, hey, soon you're going to start seeing this happening, and then soon you can imagine this. And then last year we're like, all right, you see a construction fence, like we're going to start some demo, right? Like some stuff was getting demolished. This time around, we got to really walk it, and things are coming out of the ground, and it's becoming really, really, really tangible, and like feeling that part. I thought that made this summit very, very special. On top of and then the panel talking about it was great, but the mayor being there, I thought was amazing. And I don't know if you realized it, but the mayor said something multiple times in that presentation that we never ended up like doubling. Like we've said this word a lot, but we never ended up tagging back to it. The mayor kept mentioning momentum.
I do remember that. Yeah,
right.
Absolutely.
Like the mayor said momentum multiple times.
Yeah.
And that momentum, that inevitable that inevitable, tangible momentum to me is kind of like the thing that really, really attaches me to that upside and thinks, oh man, that upside is no longer a here's the numbers and that's what's going to happen. That upside feels like I can like reach out and grab it the same way that I can grab my single family home.
Yeah.
And that momentum piece led to the most controversial part of the conversation.
This is where you made me wildly uncomfortable on stage. Go ahead. Tell him your thoughts. I'll tell him my thoughts. You tell him your thoughts.
Yeah. So as we're talking about the presentation and the momentum piece, I was like, hey Greg, I had an aha moment a couple months prior. And I want to illustrate this with the story of Warren Buffett. And I talked about, like it's this idea of like, man, I think all of us would, like nobody here would think you'd be like foolish to invest in Berkshire Hathaway, right?
Right.
Like Berkshire
Yeah.
Hathaway has a stellar reputation. They've done amazing things. He's the Oracle of Omaha, maybe the greatest investor of all time. But I went a little bit down the rabbit hole of like who, like what that means. And I found out about the Buffett effect, right? With the Buffett effect, it's not going to surprise anybody.
Right.
It's the idea that the most famous investor in the world, when people find out that he invested in something, a whole bunch of other people then copy, and that like boys the investment. It's like the idea that if the most famous investor in the world like owns an asset that seems to be in turmoil in headlines, and he's still holding on, people are like, I'm not going to sell until Buffett sells.
Mm-hmm.
But I the Buffett started a certain way, right? Like Buffett started when Buffett first started, this is what I found out. He started in like the 50s,
Mm-hmm.
came out of college, always wanted to be an investor, and his mentor and his father, who was a stockbroker,
Mm-hmm.
both said, "Don't go into the stock market yet, son. Wait till this thing crashes again and then go into it." They were convinced that the stock market would fall under 2,000 points.
Interesting.
But he continued,
Yeah.
right?
Yeah.
When he was first getting going, his mentor that he studied under, everybody was just like, man, your biggest mistake is that you didn't provide somebody, like you didn't mentor anybody that could like take the reins. All we have is this young Warren Buffett kid.
Mm-hmm.
So they didn't trust in him, so he had to go out and like get family money, get friends and family stuff, and tell people I'm investing alongside of you in order to like build trust in his thesis.
I know how that goes.
Yeah. And then everybody talks about Geico. I haven't heard a lot of people talk about American Express, but when he made his first investment in American Express was going through this like insolvency crisis. Like something had happened where everybody was the headlines were saying that American Express was going to become insolvent. So Buffett, instead of just believing the headlines, Buffett went to a steakhouse in Omaha and hung around the cashier and saw that everybody was paying with their American Express and was like, people are still using this to pay.
Mm-hmm.
I'm assuming this is happening in Chicago and in these other steakhouses.
Mm-hmm.
Then he went to a travel agency and hung around the travel agency and saw people bringing and asking for American Express travelers checks. And he's like, people are still using travelers checks from American Express.
Mm-hmm.
I'm assuming this happened in other cities. And then he went to a grocery store and saw everybody using American Express money orders. And he believed his eyes.
Mm-hmm.
He believed his eyes and was like, man, this is something that everybody uses every single day. It's not going anywhere. People can be worried about this insolvency thing, but like the public doesn't. The public still relies on this on a day-to-day basis. So American Express was undervalued. Went in on American Express. That's done really well for me.
Mm-hmm.
And what I was essentially trying to say is like, you're basically Warren Buffett. What I was essentially trying to make a comparison is like make a comparison of like, I think when you guys started investing in rental properties, obviously market had just had a downturn, all this stuff was happening, right? Like as you have built up a track record, a la Warren Buffett, and you've like, built up this track record, you've continued to believe your eyes and continue to invest in a critical need. And now you are 20 years later, you're not young Warren Buffett, you are middle-aged Warren Buffett if you're on that track. And to me, all that stuff tracks to say that the decision of investing in rental properties today, if you believe in the asset class, if you believe what you see, you believe something that everybody needs in a city that is really, really flourishing and an operator with a proven track record, that the decision to invest today in rental properties is actually easier than the decision that the Jens and the Denny's that invested with you early on
Yeah.
have made.
And that's 100% true. Yeah, I mean, so to think about what our early investors invested in, let's show one of those pictures. I think this is what got the most applause in the entire summit keynote here. This is a picture of my business partner Alex in our very first office, and if that just doesn't scream young Warren Buffett to you, I don't know what
I mean, I
does.
think the chin gap really screams it for me.
That was us 20 years ago when we started. We bought our first office and it came with the furniture, and then that furniture stayed there for at least like 3 to 5 years. You know, when Pablo was sharing this on stage, I'm looking and we've got this big picture of Warren Buffett behind me and him, and then he's saying, you know, and the gist of it is like, you know, I envision the same type of effect for JWB what that is the Warren Buffett effect. And I'm kind of tripping over my words right now because that is like there's only one Warren Buffett effect, right? You know, and so to be compared to that, I think is that it's just we're not in the same league, but at the same time, I can understand where you're coming from. You're talking about momentum, and the momentum that Buffett has is incredibly important, and it is the Buffett effect. You know, JWB, we have some similarities where we raised family money in the beginning because nobody, you know, that's how we had to start, and we had to put our money where our mouth is and invest alongside of our clients, and then we still continue to do that today. And we had to cut out the noise, and you know, we certainly did that. The momentum that we're creating today we can relate in a sense, right? It's not the Buffett effect, but there is a momentum that we are a part of with downtown. And then there is a momentum that we create simply by being this operator and being vertically integrated. So, and the fact today is that the investment 20 years ago is still the same investment today.
On paper, still is good.
Right. But you don't have to look at Alex sitting in a desk with a salon sink behind it when you're thinking about investing a few $100,000. You know, today you get to come to JWB's beautiful office. And so, so I love the message of boring, which is what Buffett is. So that's when we were preparing, I was like, man, I love this Buffett talk because I get to talk about boring. And then he's on stage and he's talking about, you know, comparing us to the Buffett effect. So it made me a little uncomfortable. When I think about Buffett, I just think him personifying boring. And I think the investments that he makes are relatively boring. And he buys and he holds and he cuts out the noise and the fundamentals work and he gets better returns over and over and over again. I like the Geico example because it's a boring business. It's insurance. And but those who invest
business that everybody needs.
Right? So we can relate to that when we're talking about single family rental properties. So that's how we kind of met in the middle on that one.
And really the point I was really trying to make was that like me and my like love of upside and all this, you know, like big swings and whatnot, the idea that momentum creates certainty is very real. I think that's what makes it all more tangible, but more like my realization that like I undervalue certainty until I really, really need it. And that really hit me. I was flying out of Jacksonville Airport a couple months ago. I saw the left tackle, Jeff Moroncow, standing in line. First thing I thought was like, wow, that's the biggest dude I've ever seen. And I was like, oh no, I know him. So I went up to talk to him and we were both talking about like this inflection point where we're at of like, you know, when is our next investment? I was telling him that I had made this other investment that took longer to like plan out until I wanted, and I really wanted to use that capital to invest in JWB, and I was in this waiting pattern. And he told me, he's like, man, you know, that's just a lesson you're gonna learn as an investor, right? Like this is why you see all of us that, you know, like have done this before and stay here, not chase other shiny objects, because it's like what you know what you can expect from JWB. Like the level of certainty that they create is something that is really, really underpriced that you don't really understand until you experience it. And that to me was the thing. It's like, yes, I do think that when Denny invested in a couple of dudes that were working out of a salon, he loved the investment, but he also took a little bit of a leap on like, can you deliver? I think we all really, really believe that JWB can deliver. I think that the rental properties in Jacksonville and the city of Jacksonville is going to do really, really well. And that like level of certainty to me is something that I have really, really undervalued all along.
Man, I tell you what, people will pay a premium for certainty right now in this world in whatever way, shape, or form, investments or just your hotel room being nice like you expect, right? Whatever can create certainty, people pay a premium for. Luckily, you don't have to pay over market value when you invest with JWB, but certainty is worth it.
And then that to me is the magic of Saran's episode, because she had a plan and because she knew where she was in the plan, and because she knew what she had to play with, she had certainty to make that leap. And then you were like, Excel World Championship, bro.
Yeah. So this is where we got to give a little appetizer into our passive income planning tool. And for those who are here on the show right now, you guys got this appetizer when Pablo sat down. He was the guinea pig, the first one that we unveiled it with. And we just kind of took him down this journey of understanding what his goals are, understanding what your timeline is, and then breaking that down into what your plan looks like today. Getting kind of a status check.
Yep.
We came to find out that Pablo's 3 turnkey rental properties with JWB puts him at about 43% of his acquisitions goal, which was enlightening for you.
It was.
You're right. I think you had thought you were going to need to buy 10 or 15 properties in order to hit your goal.
100%.
Right? Well, as we look at truly how JWB can help you get to your financial outcome, we would love to do that with the least number of capital out of pocket for you, which would mean the least number of properties. So there's a way to do that when you invest with JWB. We looked at what your monthly passive income number is. It was about what you thought, which is nice. But what you did not know was your portfolio equity being almost $270,000 from an investment that you started 5 years ago. Talk about what the big aha moment was.
Yeah, the aha moment there for me was like, I knew that my stuff had appreciated. What I didn't realize is that when you're talking about equity, the down payment that you originally put in, that you had already saved for, that you've already sacrificed for, that's in there, that's part of your equity.
Right.
And when looking at these decisions of cashing out and refining and having property babies and having a proper ultrasound, it's part of it, right? So like I that to me is kind of like the missing piece. That was an extra, I don't know, call it like $100,000 in there. That I'm able to continue to like put into the growth loop without taxes that really took me back.
100%. 100%. So then we said, okay, well, let's use this guinea pig, this beautiful guinea pig over here. And how would we create property babies in this property ultrasound that we're doing? And if we're financially engineering it, we have the ability to look at those loans and we say, okay, well, this is how much we could tap into. And then we'll go one step farther and financially engineer and say, okay, well, let's look at the 3 different loans and which one could access the most equity, but also we won't lose the low interest rate that we have, right? If there's a property out there that we can access a ton of equity and our interest rate that we have currently is very similar to the interest rate that we'll have today, well, that's a great move. And so we got a little more granular and we showed people how we would do that with Pablo. And ultimately we found out is that we weren't going to refinance all 3 properties to have a property baby. We just needed to refinance one specific one for the right reasons, access a little over $60,000, which would create the opportunity for you to have a property baby. And then we have this ability now to show people, what does your plan look like if we move forward with that? So we do a before and an after, which is what you all see on the screen right here. And so if we're able to do that and we're able to have a property baby, number one, it's not coming from your bank account, right? We're just simply accessing the equity that we already have in the portfolio. It's going to help you get farther along to your acquisitions goal. I think your acquisitions percentage will be over 50% now.
Yep. That was a big aha moment for me,
There you go.
right? Like you mentioned it before, but like the psychological factor of like getting above 50% on my acquisitions was like a big like, oh, that makes me want to do this to a certain extent. My big concern was like I knew what my cash flow was when I was going to refinance. I thought maybe I'd go back down to like break even.
Right.
That didn't sound as attractive, but seeing that like I go from 366 a month to 228 a month, that's not a life-changing thing.
Right.
In order to get that, but what is life-changing is the idea that if I do this for essentially a very similar amount of cash flow, I'm adding 300,000, 340, like about 300,000 of equity to my portfolio over the next 15 years without taking anything out of my like reserves, without taking anything out of my savings, any of that. And then that was like the opportunity to then go, while we're at Summit, meet with my portfolio manager, talk through the different options. I haven't told you this, but like, one of the things was I talked with them about, yes, I can take out 62,000. I might be able to buy like a smaller new construction house or something like that. But as you know, I look at this as how much of my allocation is in the asset class. And what I learned from going through this was that Katina, which is my higher price property, because it's higher price, the appreciation hitting creates more equity. So what I'm leaning towards is doing the cash out refi and then also adding another like 10, 15 grand.
Mm-hmm.
It's not the same as having taken out 75 grand out of my savings.
Right.
It's
Yeah.
it's only 15, but like it allows me to buy a new construction, bigger property that I kind of like the idea of like how quickly all this stuff turns,
Yeah.
higher cash flow because it's going to be higher rent because it's a bigger property,
Mm-hmm.
and then go through that like rapid pay down thing.
And your mindset is such a cool thing to bring to this community because it's very different. And we haven't talked about that, I think, enough.
Yeah.
You're thinking about this like most people think about putting money into other asset classes, which is, I want to invest in the stock market. I'm going to put this amount of dollars into this asset class. And it makes sense for me because my overall allocation is going to be X and it's going to be here. And I want to earn a rate of return here. For some reason in real estate, we don't think about it that way.
Yeah.
We're like, oh, I'm going to buy this number of houses. At the end of the day, it's all money. And we're just thinking about how much should we allocate to single family rental properties. And it helps us make good objective decisions on what the right decision is rather than getting caught up in the particulars of a certain house. So I love that. I hope we can do more about that as we get to future shows.
Yeah. Yeah. And then, the thing that, so that was kind of like the whole, like reassessing the asset class, understanding like that borrowing has gotten better, understanding that the upside is more tangible, repricing certainty in uncertain times, and then really having a tool that allows you to see this led us to the conclusion, right, that investing in rental properties today is better than it's ever been before. If you're gonna like kind of like look at it this way, right? Like it is not this narrative of is it riskier than yesterday? It's actually better than yesterday because the borrowing is better, the tangible is the upside is more tangible, the momentum is in place, and with this tool, I think we can have like way more certainty on where we are with our plan.
I think so. I think the model just works. You don't have to believe that this is the greatest time in the history of real estate or rental properties for it to make sense. I mean, there's certainly reasons that we've shared on the show as to why this is a really great time to invest. But you don't have to get caught up in all of that. You just have to find a model that works. Find the right team, find the right market, and find the right model. And then you'll have the same type of success that we get to read about in that article that we kicked off the show, sharing.
Yeah.
I mean, it's the model that's the beautiful part. And we're sprinkling in some things that should have some outsized growth as downtown Jacksonville develops.
Yeah. And the beauty of interacting with the community en masse, right? Like I got to spend time with 100 of not your average investor brethren. We've had like success stories on the show over the last couple of weeks. I think what really shone through and also what's shown through in that article, right, is this idea of the why really, really matters. The why is kind of like the thing that allows you to continue to persevere and go and fly in the face of like everybody else telling you that this is a bad time. For me, it happened as like we were gearing up for the fan appreciation show, seeing Lee's why, seeing Reggie's why, understanding that like I don't want my why to just simply be this vacuous. I want to get to the point where I have $10,000 in passive income so I have more options. Seeing my why as like, man, this momentum is so real. The city's so real. It's done so much for me. I want to be not just part of like, I get to sit on the seat of like telling the story. I also want to say, no, I also put my capital into it. I want to continue to invest in the city and like feel like I'm part of like a bigger narrative, which allowed us to then talk about how you guys have really like expanded it.
Yeah, I think when you told me, hey, I want to be a part of something bigger, right? It feels very, very natural. I think I want to be a part of something bigger than myself or bigger than the investment that I'm making. And I started to think about, how do we hire? How have we hired the best? And how do we retain the best? And how do we have our people bring their best to our business every single day? And it's really simple. We help people see our team. We help our teammates see that they are a part of something bigger than themselves. And when you can believe in something like that, it really moves you, right? It really moves you. So our team, when, at the end of the day, guys, we sell real estate and we're a property management company, but that's not who we are, right? If you talk to my teammates and for those who were at Summit, you didn't get the feel that it was just a property management company. It's because we believe we're a part of something much, much bigger than ourselves. But when I started to think about it a little bit more than that, it's like, what's better than bigger? It's more meaning.
Yeah.
right? More meaning is what keeps me here doing this show after being in this business for 20 years and seeing thousands of houses be renovated and built and sold and managed and all that. It's meaning, it's impact. And the greatest impact that I think we are seeing right now, and I think maybe the most needed in our society, is helping folks to become homeowners themselves. And we started to change how we think about ourselves as a property management company from just trying to deliver world-class service for our residents and for our owners to, at least in the resident perspective, we started to think about property management companies as being on the threshold or the doorstep of a homeownership for renters.
Yep.
And we manage, 5,700 homes. That's over 9,000 residents that we serve. And wow, if we adopted this intentionality by being the doorstep and the threshold to helping our renters become homeowners, how could we change lives? Started to put the numbers to it, and the average renter in this country has about $10,000 of net worth, and the average homeowner has $430,000 of net worth. And then if we put it all together about how we're so passionate about downtown and the revitalization and how investors are going to win, we also know what happens on the other side of that for those who don't own houses and they get left behind. So I just ended the keynote talking about the impact. And I wanted everybody in the room to understand that as an investor within JWB and as a teammate within JWB and me and you, our impact is going to be measured not only in the downtown revitalization, not in our investor returns. It's going to be measured in how many renters now become homeowners because of the opportunity to rent with JWB, which is a reflection of your opportunity to invest with JWB. Last year, we turned 18 of our renters into homeowners. By doing that, those folks are going to be a part of the $430,000 of net worth soon, not the $10,000. And think about how that impacts themselves, their family, aunts, uncles, nieces, nephews who watch that transition. This year, our goal is 48 renters turned into homeowners. And we have an entire program called HomeStep that helps our renters do that. It's the only property management company in the country. So when I think about what I think about every day and what makes me love this business more every single day is that's the type of impact that we get to be a part of. And that is what really matters, man.
I love it, man. I know that, it started off with charitable efforts, giving away a house a year. You got to somewhere, I'm going to mess up the numbers, right? But I think you guys gave a house a year away, got to somewhere around like 6 or 8 houses or something like that.
Mm-hmm.
And then at a certain moment, you're like, no, we need to build this into like the core thing of what we're doing. Now, year 1, you're at 15. Next year, you're going to be at 45. In 15 years, what that means, like
Right.
all these like transcendental moments. It's a really, really awesome line. And yeah, man, that's what the piece on the Wall Street on the Jacksonville
How cool
Business
is
Journal
it? And then the article
picked
came
up.
out. And they talked a lot about that.
They picked up on all of that, man. I thought it was really, really cool. And that was it, man. That was the journey at Summit, right? Like, was seeing all this stuff come true, was being a part of this conversation, was seeing like meeting with your portfolio manager afterwards, talking to everybody, seeing how like real all that was really, really magical. And we wanted to share that on the show here for those that didn't go. We wanted to kind of relive it with those that did. I see a lot of folks here. I also see a bunch of questions here. You want to hit on some of these questions?
Let's do it.
All right. I saw first was HT says, can you shed some light on Duval County investing in the city sewer system, replacing all septic tanks at no cost to owners? Is it true? Do you know how long it takes? I know it's a long-term project. Wondering approximately how long.
Yes, it is true. But it is also true that we have no idea how long it is going to take. So there is a plan to turn septic neighborhoods into sewer neighborhoods. It's a plan that's been talked about for a long time, but there is way more momentum now. And so there is a neighborhood that we invest in, that our clients invest in, that I just heard is undergoing that transition. I can't remember which neighborhood it is off the top of my head, but it's being talked about and it's happening here. I don't want to get anybody's hopes up, though. It is a long-term thing. It is not going to happen to every neighborhood, and it's not going to happen overnight. For those who invested with JWB, who own septic properties, you have nothing to fear. Septic is we have already built in the costs associated with septic into all of your property evaluations. So we're not counting on that transition to happen in order for your investment to be successful. But if and when that happens, that would be a cost reduction for you. So it would be something that would be a benefit. So yes, I would say be patient. Don't get too excited because the city moves slowly, but I do know that there's momentum and there's money in the city budget to be doing that, and they're moving at a relatively slow pace to make it happen.
Very cool. Very cool. Patron Santorius, Marco Santorius says, Gregg and Pablo, I really enjoyed the summit. It was incredible to see how the city has changed and improved since I was there in 2014. At this year's summit, I didn't see or hear any discussion about whether JWB is currently implementing any AI systems. Oh, he meant to say 2024. When he was here last year, he's seen a lot of change.
I see.
At this year's summit, I didn't see or hear any discussion about whether JWB is currently implementing any AI systems or planning in the future. Are we the one event that happened in 2026 that did not talk about AI?
There's a lot of movements that are being made on the AI in the AI space internally, even though we didn't we didn't talk a lot about it at Summit. I think we are advancing. I wouldn't say we're a leader or leading the pack when it comes to AI by any stretch of the imagination. It's not really how we're built as a company, but we certainly don't want to be a laggard. So we have, I would say, like the low-hanging fruit from an AI perspective. We've trained our team on how to use Gemini and Copilot and trained both the opportunities there and also the risks to make sure that you don't share some things with AI. So we just recently had a presentation on that and have standardized how we use AI across all 120 plus teammates. And then we've taken some swings on some projects from an AI perspective. One of the projects that we recently rolled out was, and I don't have the right terminology. You can tell I'm not exactly this isn't my cup of tea,
You're
but
not the AI guy.
For lack of a better word, there's an AI agentic bot that helps us have phone calls answered. And guys, we get thousands of phone calls a week on the rental home side. So we said, well, how can we do this? How can we keep up our level of customer service and also lean into AI so that our residents can be helped to rent homes quicker and have a great service experience? So we've taken some swings at that, and we're in the process of kind of evaluating how that is working. But I think we're going to go maybe middle of the pack or a little bit slower than the middle of the pack would be my guess when it comes to AI. We are not going to be a laggard, but we're not going to be a trendsetter, in my opinion.
Makes sense. Makes sense. Mark Norman is asking me, Pablo, how do you decide on your allocation? I've mentioned this a couple of times, right? But I read this book probably around like 2014. It was called The Black Swan, and it's an investment philosophy that's really stuck with me. The premise of the philosophy is, black swan events are these like moments that happen in time that couldn't have been foretold when they happen, but once they happen, the world unequivocally changes from there on out, right? Like there's positives and negative ones. 9/11 was a black swan, right? Changed the world. Did not see that coming. COVID was a black swan, changed the world in many different ways. Positive black swans are like the internet, right? Like AI, depending on how you look at it, could be a positive black swan. These kinds of things. And the argument in this book is saying basically the world is way more interconnected. It's funny how talking about it right now, I haven't talked about this in a while.
Yeah.
Now, in light of everything that's happened, the world is way more interconnected. There's going to be more and more black swan events happening. And therefore, you should invest understanding that like you shouldn't put yourself at risk of negative black swans, and you should have upside to positive black swans. So it's funny that we're talking about this right now because we've talked about this whole idea of like the old model of save then spend puts you most vulnerable at your most vulnerable, right? Like get to a number and then live off of it.
Right.
That increases your exposure to like being affected by negative black swans in retirement when you're like really, when you're most vulnerable, right? Like, so from that moment on, so what that book says is essentially like invest 80, 85, 90% in like the highest upside, safest thing that you can, and then invest the rest in exposure to positive black swans. And as I'm talking about this, I realize that I'm really doing this to a T.
Interesting.
I knew once I found rental properties that I wanted that like really safe with upside to be rental properties. So I see myself investing somewhere between 80 to 90% of my net worth into workforce housing rental properties, and I'm probably right around that 90% part there. I'll probably kind of like, as I make more money, diversify a little bit more. But like, and then I myself, I'm like very heavily invested in the AI world. I have equity in a startup that I'm like part driving, right? That I think is like, has that like positive black swan moment on the AI side. I like picking a real estate portfolio that exposes me to category kings that can like create this thing. Like I'm super heavy on NVIDIA and things of that sort, right? So like I don't know if I'm allowed to say all those things on air.
Oh yeah, you're just talking about yourself. That sounds great.
Yeah, I'm not giving financial advice.
Yeah.
I'm just saying my allocation, right? Like I've just very purposefully thought, oh, okay, up until now, I didn't realize that there was such a safe container that I could be so like really well allocated
Yeah.
that has so much upside as Jacksonville rental properties and real estate in general, right? So like, Mark, that's my thing. Like I'm just like whenever I can make sure that I'm building up that like really strong base of rental properties that get better with time, I'm going to do that. In the meantime, I spend my active income and my like active investing looking for these like really, really high upside things at a rate of, like 10 to 20% of my net worth with the rest of it in real estate.
Love it, man. That's an awesome question. Great answer, man.
Yeah, I like I haven't really revisited that whole like theory and the whole thing
Yeah.
after post understanding that like retirement as it stands today isn't really working for people.
Right. Yeah.
Like that, which we
The
came
Black
across
Swan
like 2
thing
years ago.
makes a lot of sense to me. I mean, I can kind of relate it to like how JWB invests,
Yeah.
right? Like I wouldn't call it Black Swan events, but there's call it 10% ish of what we do is for, we're going to make a calculated bet on something that isn't maybe here today, but we think will be a big thing. Call it downtown, right? Like 5 years ago, we made a calculated bet on, on downtown. We put a significant amount of our capital into it, but it wasn't something that was 50%, right? Maybe it was somewhere around 10% of the capital. And we said, all right, this is going to be our bet. So I can get down with it.
Yeah. Like I remember, I forgot what happened. Something happened about a year ago where like the stock market, I think it was like post-election, something happened. The stock market took a dip. Like it was the last time that the market took like a big correction. And I was just like, we talked about it. It's just like we had Hervé on the show and we had, I think, Jake Harrop on the show. And we were just talking about how we had very different reactions to these Black Swan events happening because we understand that we're in boring old single family rental properties and that's where our net worth is. And like that didn't have a giant fluctuation. And we're now in a great place.
Yep.
So
that gives you the ability to go in search of
be risky and all this stuff and like make my big swing.
Right. There you go.
Yeah. 100%. All right, man. That was awesome today, bud.
Yeah, this is great, man.
Yeah, I really enjoyed it. Like it was way more stressful to do this on stage than it is just here having a conversation.
It is. I concur. And just the week is amazing and there's a lot going on. Now we're just sitting here chatting with our buddies.
Yeah. It's cool. So next week by the way, next week we're gonna talk about the ULI report.
Yes.
The latest ULI report.
Yeah,
They're talking about the Great Reset.
Yep.
That's the big term in the ULI report. We're gonna talk about what that means for real estate investors, obviously. And I just, man, as we were talking about the summit, as we're talking about that article, as we're talking about all these things, the community, man. The community is what makes this thing special. The community, you guys showing up here on a Zoom call week after week, middle of your day, to like be part of something is really the secret sauce behind all of this stuff that makes it all possible. So thank you for showing up today and showing up as you always do. And I hope to see you on the next show. And apart from that, GC, I think there's one last piece of advice.
Don't be average.